This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Chinese refineries processed 3.3% more crude oil in the first 2 months of 2023 compared with a year earlier, data showed on Wednesday, spurred by fuel export policy and as independent refiners processed more in response to improving margins. Recovering domestic demand for gasoline and aviation fuel as more people traveled following the scrapping of COVID-19 controls also supported refinery production. Crude throughput in the January to February period reached 116.07 million tons. Data from the National Bureau of Statistics showed, equivalent to 14.36 million barrels per day, BPD.
Saudi Arabia's Energy Minister Prince Abdulaziz bin Salman told Energy Intelligence in an interview on Tuesday the OPEC Plus alliance will stick until the end of the year to production cuts agreed in October. There are those who continue to think we would adjust the agreement. I say they need to wait until Friday, December 29, 2023 to demonstrate to them our commitment to the current agreement. Prince Abdulaziz also said the US Senate's proposed NOPEC bill was a different concept from price caps that have been imposed by Western countries on Moscow over the invasion of Ukraine, yet they had similar potential impacts on the oil market.
Moving on to the top news in the energy sector.
Russian oil and gas production is expected to decline in 2023. Energy Minister Nikolai Shulginov said on Wednesday, as Moscow comes under pressure from Western restrictions and a lack of European buyers. Russia has drastically reduced its energy exports since sending troops into Ukraine just over a year ago, in part due to Western sanctions and a Western price cap on Russian oil. While it has managed to divert some of its oil to major buyers such as India and China, Moscow said in February it would cut output by 500,000 barrels per day in response to the price cap.
Britain extended its support for household energy bills by 3 months to the end of June, the government said on Wednesday, a measure that should help to contain rising living costs. In a statement hours before Finance Minister Jeremy Hunt is due to announce the government's budget, he said Britain would maintain a price guarantee that will keep average annual bills at £2,500, $3,039, for an extra 3 months. High energy bills are one of the biggest worries for families, which is why we're maintaining the energy price guarantee at its current level, Hunt said. Next, we have the top news in metal markets. China's demand for Australian coking coal for steelmaking remains lackluster even after Beijing removed import restrictions. As supplies from local mines, Mongolia and Russia are cheaper, traders say. Beijing in early January partially eased an unofficial ban on Australian coal imports by allowing 3 state-backed utilities and a steelmaker to resume procurement as the two countries sought to rebuild ties. The restrictions were further eased last month after China's Commerce Ministry said coal trade is a normal activity.
China's aluminium production rose 7.5% in the first 2 months of 2023, official data showed on Wednesday, after the end of strict COVID-19 controls improved the economic outlook and lifted demand expectations. The primary aluminium output in China, the world's largest aluminium producer, reached 6.74 million tons in January to February from 6.33 million tons the same period a year earlier, according to data from National Bureau of Statistics. That marked the highest output for the 2 months since at least 2015.
We will now look at the top news in the agricultural sector.
India's palm oil imports in February dropped 30% from January to their lowest in 8 months on weak demand amid build-up in stocks because of excessive imports during November to January, a leading trade body said on Wednesday. The reduction in palm oil imports by India, the world's biggest importer of vegetable oils, could weigh on Malaysian palm oil prices. India's palm oil imports fell to 586,007 tons last month, the lowest since June 2022, Mumbai-based Solvent Extractors Association of India, SEA, said in a statement. That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.